Good morning, ladies and gentlemen. What's up, traders? What's going on? Welcome back and happy Money Monday. How is everybody doing today on this fine Monday? Is that Tom I see with his mic open? Tom wants to say good morning. Go ahead, Mr. Tom.
Good morning, everybody. Let's go. Let's rock this day.
That's right. I mean, I think Tom's pretty excited this morning. I hear the excitement in his voice. Is it because we have a lot of earnings this week? Is it because we got an economic calendar full of data? I don't know, but he seems pretty excited.
2 feet hit the door, hit the floor today. It's a great day, and it's
yes.
Great. Wow.
2 feet. Yes, hit the floor. We're alive. We're breathing. It's a good day, guys, for sure. But
again, Money Monday, baby. Money Monday.
And hey, if the market gives us opportunity, let's lock in some money, baby. Let's make it happen. So hit me with a big old good morning inside of chat. And if you're feeling up to it, go ahead and hit everybody with a big old good morning if you're in the Zoom.
Good morning.
Good morning, Catherine. And then everybody else.
Good morning.
There we go. I'm just going to shut up. I'll let you guys all say good morning. Andy, what's up, brother? Good morning. And then everybody else inside of chat as well. Good morning. Welcome back. Hopefully you guys had a wonderful weekend, and hopefully you guys are fired up, ready to rock and roll for today, ready to make it happen and have an amazing start to the week. So without further ado, let's dive into it. Let's talk about what we got going on for today. Really make sure that we take this time to get you guys prepared for today's session, answer any questions you have, review any stocks that are on your radar, and we'll be all set for market open at 9:30, guys. So first and foremost, let's go right into the economic calendar. Let's take a look at what we got going on for today and really just get mindful of that, right? And if there's anything that really stands out to anybody and you want to expand upon any of this data, go ahead and just cut me off as we're reviewing this and go ahead and elaborate and expand upon like the importance of any of this data and how it could impact the market. If there's any thing you guys would like to share, feel free anytime. All right, so today, I mean, we are pretty much in the clear, guys. We got some light data being released here at 11 o'clock, and that's going to be consumer inflation expectations. So just be mindful of that. That's going to be released here at 11 o'clock this morning. And then other than that, you got the monthly budget statement report set to be released here at 2 p.m., and that's of medium importance. Now, I don't recall how that type of data moves the market, if it does in the first place, if it's something that we have to be extremely mindful of. So if anybody has any 2 cents on that, feel free to expand. But that's of medium importance, and that's definitely something to at least be mindful of. And that's set to be released here at 2 p.m. today.
Not a big mover.
Not a big mover?
I haven't experienced that in the past. I mean, unless you have something so far out of bounds, but it's not talked about much through analysts and economists, so I don't put a lot of weight on it.
Gotcha. Awesome. So yeah, I mean, today we're pretty much in the clear, guys. But let's go ahead and set some expectations for the week, right? We got a huge week full of data. So if you guys are thinking about swing trading anything this week, be mindful that this is a very important week for the market. Tomorrow we have PPI data being released 8:30 in the morning. Here coming up on Wednesday, we have CPI data, 8:30 in the morning. Thursday, jobless claims, retail sales, industrial production, business inventories. I mean, we have a full slate of data here on Thursday. Then coming into Friday, we got building permits, housing starts, Michigan consumer sentiment. I mean, this is going to be a very, very busy week for the market. And we got a lot of great earnings as well, guys. Take a look at the earnings calendar this week. And we got a lot of, big name earnings, right? You got Walmart reporting this week. You got Home Depot, Cisco, Applied Material. I mean, so it's a very busy week for the market indeed. We got a lot of great earnings as well. So just be cautious, tread lightly, always be thinking in terms of capital preservation, not taking any kind of like unnecessary risk in the market. Again, it's going to be a very busy week. So again, you guys are all set here, guys. But for today, we are pretty much in the clear. Now, we do have a pretty limited watch list for today. There's not really a lot that stood out to me, really at first glance, as I'm going through my pre-market preparation, looking at, my watch list of stocks, not a whole lot really standing out to me. So we'll discuss the SPY and the Qs, break that down. I think we have some really good opportunity today with just the SPY and the Qs. That's really going to take most of my focus. We'll definitely take a look at Apple, Crowd, and Amazon. Those are going to be the top 3 stocks for today. Sorry, I thought my daughter was going to walk in and say bye for her first day back to school. So here during the rundown, I may step out for like 60 seconds and just say goodbye and wish her good luck on her first day of school. But yeah, let's go ahead and start with the SPY. It's a very simple day today, guys. Okay, there's really going to be one main area that we're watching, and that's going to be this overhead gap. Okay, so let's go ahead and get this gap marked up here on the SPY. The bottom end of this gap is at 537.02. The top end of this gap is going to be right around 539.42. And let me make sure that is dialed in. We could probably drag that up a smidge. It's actually 539.43. Okay, so go ahead and throw that gap up on your chart here on the SPY. Then what I want you guys to do as well is use some fib extensions off these swing high to swing low moves. Okay, and you're going to see something pretty nice here. So go ahead and take a fib extension from this swing high down to that swing low, get it populated on your chart, and then to do the same thing here from the all-time high, swing high into that same swing low with a fib extension, and go ahead and get it on your chart. And what do you notice about this gap, right? Well, we got a daily gap, number one, right? Number two, your 20 EMA is sitting right inside of the gap. That's an area of resistance, number two. Number three, look at these fib extensions. This extension from swing high to swing low, what do you got right there? The 38.2 extension level right there. Okay, and then you look at this bigger extension from all-time high swing high to swing low. What else is right at the 38.2, literally to the penny? The 50%. So you have the 50% retracement sitting right here. You have the 38.2 retracement level sitting right there. It's also inside of that daily gap, and you got your 20 EMA sitting right there as well. There is a lot of resistance here on the SPY right around, you know, this like 538.20, because that's right around the 50%. That's right around that 38.2 and right around that 20 EMA, right? All inside of that daily gap. So I really want to put a lot of focus on that daily gap here today because we have a lot of confluences and a lot of areas of resistance inside of this daily gap, okay? So this is where my head is. Like if we see the SPY come up and maybe fill the gap today, get rejected off those fib extensions, right? Get rejected off that 20 EMA, right? We can absolutely see an opportunity to get short for a gap fill rejection to the short side. Right? We have a lot of resistance overhead, and we could see a great opportunity to play this market short today. So game plan number one is really looking to see, is the SPY going to come up inside this gap, hit all of this resistance, and then simply get rejected? If so, let's identify an opportunity intraday to get short, and let's play it short. How much room to the downside would we have? Right? Well, there's some pretty significant lower levels to the downside. But first points of reference, really just going to be looking at Friday's high a day and Friday's close. Those are going to be the two first points of reference as far as some lower support levels. So Friday's high a day is at 534.55. That's an area that could hold as support intraday. And then Friday's close is down around 533.02. That's another area that could absolutely hold as support today. But more significant levels to the downside, the first area that I see up against Friday's low, but it also has multiple touch points here in the past. So I like this zone down between 528.51 to 528.76 is our first most significant lower level of support here on the SPY. And then from there, we can see it all the way down between 521.87 to 522.24. Give me 1 second. I want to wish her goodbye real quick, and I'll be right back, guys. In the car. All right. So that's kind of where my head is, guys. All right. So if anybody else has anything they want to add to this, open the mic, feel free. I know a lot of you guys in the morning, you come in, get your preparation done, you find your zones, you find your levels. If there's anything else that really stands out to you, you're like, hey, I want to add this. Let's discuss this. Go ahead and open the mic and let's jam. But that's what I really want to focus on here today is really just keeping my eye on all of this overhead resistance, right? Bottom end of the gap is at 537.02. Top end of the gap is at 539.43. Something else that I want to do here as well is I just want to take a line and mark it up right here at 537.84. Why do I want to do that? Number one, because that line is where the 50% extension is, and exactly where the 38.2 extension is, and pretty much where the 20 EMA is. Okay, so I just want to keep that line on watch as a reference point, right? And see if that line is the barrier of resistance inside of this daily gap, and see if that's an area where we have the opportunity to start looking to get short on the SPY today, guys. Okay. Other than that, you know, as far as getting long, I mean, I would have to see the SPY come back down in some like lower key levels of support to even consider, you know, like getting long. So the last area that I do want to go ahead and throw up is going to be a zone off of Friday's high a day and a zone off of last Friday's high a day. Not last Friday, I'm sorry. Not last Friday, but the Friday before. So look at that candle close and look at last Friday candle close as well. And if you look left, it was also that gap up rejection off all-time highs where we had a massive rejection, and then we broke above it and held it 4 days back to back to back. So that's going to be a pretty decent area to keep on watch for today, guys. Let's go ahead and add that as well. And that zone, again, really just being created off of Friday's high a day, not last Friday, but the Friday before that, close. And I said high day, I meant close. And then Friday, August 2nd close, and then we capture all of this support resistance here in the past as well. So that zone is going to be between 532.89 to 533. So that's actually going to be the nearest level of pretty decent key support on the SPY before we get down into this 528.51 to 528.76 region. So if I were to get long, I would want to see the SPY open, pull back into that zone, and just hold it as really great intraday support. If we see that take place, I'm willing to get long up into all of this resistance, and I'll take profit. I'll get out. Sit back and wait and see, do we have a short opportunity presenting itself? And if so, I want to look to start getting short up against all of this daily resistance. And here's how I want to get positioned, okay, to the short side if we see the opportunity. If it comes up and we get rejected and we get short, I don't want to play 0 DTEs. I don't want to trade Friday's expirations. I want to go at least 2 to 4 weeks out. Why would I go 2 to 4 weeks out on a day trade? Well, let's just say I go 30 days out and I get short and the thing drops hard today and I'm able to sell 70% of my position for profit, okay? And then hold 30% of my position risk-free. Why would I not want to hold 30% of my position completely risk-free throughout the rest of this week to see if data is another catalyst that helps the market see more downside? If I can secure a majority of my profit along this potential day trade and I can leave a runner and that runner be completely risk-free, I want to do that, right? Because this is a great key area to be getting short, number one, but I don't want to swing through data. So I'm going to have no risk or reduced risk. And that's the best way to get in a position with little to no risk to hold through some of the data. And again, maybe the data be the catalyst that sends the market back down to where those runners could absolutely print. So that's where my head is. And that's what I want to be doing today if that short opportunity does indeed present itself here on the SPY. All right, if you guys have any questions about the SPY, go ahead and let me know before we move on to QQQ. And if you have anything you want to add to the SPY, now is the time.
Hey Josh, you mentioned a zone on 524. Can you, because I got lost in that one. And when you went short.
What was that again? I'm sorry. What was that again? I couldn't hear you.
The last zone that you mentioned for when you went short, it was on 524, I think it was.
The date? Like May 24th?
No, it was the zone.
Oh, it was a zone. So I have a zone way down here between like 521.87 and 522.24.
Yes, because I couldn't get that one a little bit. Like, can you explain it a little?
Gotcha. Okay, I understand now. Sorry, I didn't understand in the beginning. So yeah, explaining that zone is I'm just really looking at some of these data points and some of these candles just from last week's session. And so I see Tuesday's close, and then I see Thursday's low of day, right? And then I see that big red candle on Wednesday that goes right through it. But then when I drill back into a lower time frame, even that Wednesday candle that just drilled right through that zone, look at how we came down to the zone and bounced, cracked it, and then retested it and then flushed. You can't see that action on the daily, right? I can't see any kind of development or action on that Wednesday candle on the daily. But I can see that I have 2 points in between that big red candle. I'm curious, was that zone respected intraday? When I go down into my 5-minute time frame and I look at that zone over, last week's session, it grinded that zone multiple times. Resistance, pre-market, post-market resistance, support, resistance, support, resistance, support. I mean, look at how many times it's touched that on our lower time frame just over the past week. On the daily, what do we get? 2 points. But when we drill down to that 5 minutes to really just see, we get 1, 2, 3, 4, 5, 6, 7, 8, 9 valid points just over the past week, which again makes me feeling pretty confident to be watching that zone for today. So that's how I found that zone between 521.87 and 522.24.
Thank you.
Absolutely. Let's go ahead and move on to the QDQs and talk about what we got going on here. So it's going to be the same thing that we have with the SPY, just different price levels. Okay, so go ahead and mark up this gap here on QQQ. The bottom end of this gap is going to be at 453.62, and the top end of this gap is going to be at 456. Okay, then I want you to do the same exact thing with those fib extensions. So fib extension from this swing high to this swing low. Okay, what is at the top end of the gap? The top end of the gap is where your 38.2 extension is. Okay, so you get some confluence there, right? And then take another fib extension from the all-time high, swing high, into the same swing low. And then guess what else you have? You have that fib's 61.8. And that's kind of near the bottom end of the gap. But at least we still have confluences at these gap levels based on those fib extensions for these possible retracements into all of this resistance, where we could see some lower highs created and see the market have another leg down. So I'm really just eyeballing that gap level today here on QQQ. And on top of that, we have the 38.2 extension near the top end of the gap. And then we have this 61.8 extension near the bottom end of the gap. And then I also want to have another tight, little smaller zone. It's like a zone inside of a zone. All right, we have this bigger daily gap right here, but there is this even teenier little gap right here, right? Even between these 2 points. So I'm going to put a zone inside of a little zone here, okay? And so that other teeny little zone in between those 2 candle points is going to be 453.61 to 454.15 as a nice reference point. We may not come up and fill the gap completely into that candle low. We may come up into the 61.8, into the bottom end of the gap, into this little imbalance, nothing crazy, this even littler gap right here, and that could be the rejection point, and we have more confluences at that level as well. So it's an area that I want to definitely keep on watch to see. And I want you guys to do the same thing with the SPY. I forgot to mention that. So I want you to do the same thing on the SPY, is throw another little zone in between these 2 points. And it's an even smaller little gap inside of a gap, okay? And so that puts you at, what is that little zone? That's 537.02 to 537.45, right? A little gap inside of a bigger gap. And it's definitely an area that I want to keep on high watch on the SPY, and most definitely here on the Qs as well. Right, so really want to see what the Qs do if we get up into all of this resistance inside of these daily gaps, that big gap and the little gap inside of the bigger gap. Plus we have those fib extension confluences that line up nearly to the penny, right? Then we got to just look left and get an idea of where could we see the Qs go back down to. So I'm just going to start marking up some of these pretty clear areas. So right here between 448.69 to 449.05, right? Then I'm just going to look left and work my way on down and find those multiple touch points, right? Those key zones of support resistance, and just really just work your way down. Now, again, it's a bit challenging in this region because last week wasn't the best looking week on the daily. It was a pretty choppier week in my opinion. So it's a bit challenging to find some, really nice key zones. So you just got to scroll in a little bit more and just really get a little bit more dialed in here. But then I'm going to go down probably into this little lower zone right here. Like just up against Thursday's low of day and also Tuesday's open, and just have that as a reference point. And then utilizing that reference point, drilling down into a lower time frame to see, can I create a zone around that point? And nothing really stands out to me as far as creating a zone around that point. So I'm just going to go ahead and leave it there at 437.21. All right. But with all that being said, we have our two main key levels to focus on. We have that daily gap to the upside. We have that smaller gap inside of that bigger gap with those fib extension confluences. So we know we have a lot of resistance overhead, right? Just looking to see where we see the Qs top out. If we do, where's the best area to get short up against all of that daily resistance, with a first target to the downside into that first little daily zone of support that we have here on the Qs between 448.69 to 449.05. So that's the short plan. But at the same time, we could see the Qs open and start to fall first into that lower zone of support. We may not see it push up into resistance first. We may pull back into support first. If that's what we see take place, I am willing to get long at this little lower zone of support if we hold it on up intraday today up into all of that overhead resistance. And then again, just looking to see where is the best area to get short inside of all that daily resistance if we even see the short opportunity presenting itself in the first place. Okay. So today, I really got all of my focus on the spine, the Qs, as we're coming up into these daily gaps and all of this daily resistance, looking to see, hey, are we going to have that opportunity presenting itself to get short? And can we look for a nice little opportunity to the short side today, guys? All right. Other than that, I still want to watch Apple today, maybe for a little gap fill rejection, right? So we started to pretty much come up and fill that gap on Friday. That was a trade we were discussing. I missed the opportunity to get in, and then it nearly filled the gap. So the top end of this gap on Apple is at 217.74. So if we come up to that 217.74 region on Apple, and we see good intraday price action and good price development suggesting, hey, there's substantially more sellers than buyers present at the top end of this gap, I would be willing to get short for a gap fill rejection, right? Expecting to see some downside, probably back down towards around 213 to 214 here on Apple as some intraday targets. And then not only do we have the top end of this gap as some potential resistance where we can get short today, it's also right up against the daily 20 EMA as well. So definitely keep that 217.74 region on high watch. And let's see if price action validates a short opportunity for a possible gap fill rejection here on Apple today. So I got Apple on watch. I don't think Crowd is going to make it, but I want to keep it on watch the rest of this week. So today, in the next couple of days, we'll see if CRWD can come up and fill this gap for maybe a little bit of a gap fill short opportunity here. But go ahead and just mark up this gap that we have here on CRWD. The bottom end of this gap is at 248.53, and the top end of this gap is at 257.36. Go ahead and just mark that up. And if we ever see Crowd, CRWD, getting inside of this daily gap, we could look to play it long for a daily gap fill long up into that 257.36. And then if we ever see CRWD filling this gap, we can absolutely look to get short for a possible gap fill rejection. All right, so just go ahead and keep that on watch, mark up the gap, set your alerts. And again, let's just keep it on watch today and the rest of this week to see if we have any opportunity to trade inside of that daily gap here on CRWD. And then lastly, Amazon. And wouldn't you know it, it's another gap, right? So look at Amazon. You do have this pretty big daily gap here. So again, let's just go ahead and fine tune that gap level, get it connected pretty much penny to penny, and we have. And go ahead and just mark up this gap. Right, bottom end of the gap is at 168.81. Top end of this gap is at 176.79. Right, at the bottom end of the gap is also the 200-day moving average. At the top end of the gap is also the daily 20 EMA. So not only do we have, right, these daily gap levels to be paying attention to, we also have these two pretty strong moving averages sitting right at those areas to the penny, right? So if Amazon comes up and breaks inside of that gap, right, we would also be pushing above that daily 200 SMA. And if we pull back and hold the bottom end of this daily gap as intraday support, we're also holding that daily 200 SMA as support. That could lead to a nice big push to the upside where we can see Amazon today, maybe into tomorrow, right? Coming on up to fill that daily gap at 176.79. And if we ever come up and fill that daily gap, what could we do? We could look to get short for a daily gap fill rejection. And then on top of that, that's also where that 20 EMA would be as well, giving you even more resistance overhead to get short at the top of that daily gap. So let's keep Amazon on high watch as well. Bottom end of the gap is at 168.81. That's also where the 200 SMA is. And then top end of this daily gap on Amazon is at 176.79, which is right around the 20 EMA. So we have Amazon on watch as well, guys. Okay? Other than that, you guys are all set, ready to rock and roll. I do want to put most of my focus on the SPY and the Qs here today and really just see if we get up inside of these gap levels, see if we get rejected, and hey, how can we get positioned to capitalize on some day trade opportunity and maybe even for a nice little swing trade as well. You guys have any questions? Go ahead and just let me know. More than happy to get those answered. If there's any other stocks on your watch list that you want me to review, go ahead and just bring those to my attention. We definitely have some time to check those out. We got about 3 minutes until market open, guys. All right, we are live. Yes, I remembered to take us out of pre-market mode, so you're welcome, guys. I gotcha. We got 2 minutes to market open. Anything you want to add? Anything you want to bring to our attention? Now is the time. If not, we got about 2 minutes to market open here. Let's have a fun day, and let's have a profitable day, guys. Make sure we get those hedgy pressures right when the market opens. We're all dialed in. You give me a 533 hedge pressure on the SPY and we come down into that level and hold it as support, count me in. Count me in. I would absolutely be willing to get long at that 533 zone of support if we can back it up with some hedge pressures as well. So let's see what we got coming on up here. But other than that, if you guys are here watching the pre-market rundown inside of Market Chatter, have an amazing day. Trade smart, trade safe, and we will see you guys back here tomorrow morning at 9 a.m.